Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys are having a very nice weekend so far, and hopefully you're able to lock in some very nice gains in the last week of trading. As for myself, I'm currently traveling across Asia for the next 4 or 5 weeks, so my apologies if the quality of the sound or the video are not as they are when I am back home. However, I will still be bringing you guys the content as per usual. Every Sunday, we will still be doing the top 5 options videos, and then every Monday through Thursday we will be doing the daily market recaps after the close. So in today's video, the options video, keep in mind all of the options plays are going to be for selling options, more specifically for selling put options as part of the wheel strategy that we like to run on the channel. Why do I enjoy writing puts so much, and why does it represent 80% of my trading volume in my accounts? Well, for 3 simple reasons, guys. Number 1, it's a very easy strategy to either learn if you're a beginner, manage, and then scale up or down. So regardless of your account size, it's very easy to implement. The reason number 2 that I love this strategy so much is because what I'm doing right now, it's very low time management. So in the event you have a full-time job or you're traveling such as I am right now, and it only requires about 15 to 20 minutes of your time per day, sometimes even less than that. And it's just basically a set it and forget it strategy. It's very low time management, very low time intensity as well. And then reason number 3 that I love this strategy so much, well, it's very consistent and it has a very high win rate. Keep in mind that if you are respecting the strategy rules that we'll be going over in today's video, your win rate should be about 90 to 95% of all trades, meaning that come the Friday close, you'll just be able to just let your positions expire worthless, or you will have had some opportunities to close them throughout the week. And in the rare occasion that you get assigned the shares, well, you're going to be buying shares of your favorite companies at a discount at a strike price that you actually want, and then using covered calls to get out of the position is extremely simple. So in today's video, we have a few things to look at first. Number 1, we'll be going over the expectations for the week. What do we have in terms of macro catalysts that we have to look out for? Any economic releases to pay attention to that might bring volatility into the markets? We'll be looking at those first. Then, of course, as part of that section, we'll do a brief technical analysis rundown. We know that last week was a very bumpy week. We got tons of jobs reports, and then we got the non-farm payrolls that came out last Friday, which was, well, a lot less good than expected. So we'll take a look at that and see how it might impact the markets coming into this week and any impact on the potential path of interest rate cuts. We know that there's a meeting coming up in about 10 days at this point from the Federal Reserve, so we'll see how the markets are shaping up leading into that, and if it's still a good opportunity to be selling puts in the market at this current time. Thereafter, we'll be going over the strategy rules very briefly. I'll spend about a minute, show you guys the strategy rules and some best practice tips. And thereafter, we will be obviously looking at the top 5 options plays for the week. And per usual, I do have 10 bonus plays for you at the end of the video, so make sure you stick around for those as well. So without further ado, guys, let's jump right into the action, shall we? So number 1, in terms of the expectations for the week, do we have any macro catalysts to pay special attention to? Well, as a matter of fact, we do, and that's going to come on the Wednesday session. Wednesday, we get the infamous producer inflation numbers, the PPI. So that could be one that will move the markets, but the bigger one, arguably, is the CPI on the Thursday, right? CPI on Thursday is supposed to come in at 2.9%, which is well hotter than it was last month at 2.7%. However, a lot of people argue that the CPI may not be the best metric, and that might be true, but it is the one the market pays the closest attention to and will react from. However, if you want to kind of read a different one in terms of inflation data, you can take a look at Truflation right here, which does show that the inflation rate as per right now is currently only about 2%. I trust Truflation a lot more because it measures 15 million different products on a daily basis, whereas the CPI is kind of skewed a little bit for a basket of goods in which there's not many substitution effects, right? So please keep that in mind, although we may get a higher than expected inflation print here, and although that might lead people to believe that, well, tariffs are having a clear impact and inflation is running away and out of control, that might not be true. And we also heard from Jerome Powell a few weeks ago at his speech during Jackson Hole, in which he said that inflation as a result of tariffs was probably a one-off. It was going to be a temporary thing. And then, of course, consumers will be able to substitute towards different products and services to kind of, move their purchasing power around. So I wouldn't put too much attention on the long-lasting effects of this CPI print, but it could be something that throws a bit of volatility into the markets come the Thursday Thursday session, so please keep that in mind. And then on Friday, we have the Michigan consumer sentiment. I'm not expecting anything big from that. So arguably the biggest day of volatility this week is going to be with the CPI, right? However, we also know that we had a big jobs report on the Friday session, whereby we only got 22,000 new jobs added to the economy when we were expecting 75,000. Now, this did a few key things, and we talked about this last Thursday after the private jobs report, whereby we said, now, bad news is good news, as long as the bad news is not incredibly bad. And this report, although well off the standard, is still not actually negative. We're still not losing jobs. Right now, we currently stand in a no hiring, but also no firing environment. Are there certain layoffs per different sectors because of the direction of the economy right now, or which sectors and services or goods are doing better than others? Yes, but are we seeing broad market layoffs right now? The answer is no. Company earnings are very strong. We're not seeing mass layoffs across the board, and we currently still have about 7.2 million jobs that are available in the economy right now. You guys saw the unemployment rate. It's 4.3%. So although there's less new jobs being added to the economy, we're not actually hemorrhaging paying jobs right now in terms of people losing their incomes overall, which is why the economy is still relatively quite stable. However, what this news report did do on Friday is it made the path of interest rate cuts a little bit more clear and a little bit more accelerated. Take a look right here. We are now currently pricing in 3 interest rate cuts before the end of the year, to where before this report, the market was only pricing in 2. It was pricing in 1 in September with very high odds, and then the second one it was pricing in was December. The one for October was largely not present before. Now you can see the market is pricing in 3 interest rate cuts, 1 in September, 1 in October, and then another one in the December period. That is why the markets had a pretty decent rally in the Friday, or rather on the Friday session, even though that jobs report came in less good than anticipated. So please keep all of that in mind when you're running through your analysis over the course of this week. The big volatility event is going to be on Thursday with CPI, but the bulls don't look too bad right now. In terms of your earnings, well, we know that we're largely through earnings season right now, but you do have some big ones on Oracle after the close on Tuesday. So pay special attention to how this one might affect certain software plays that you might be in, and maybe even some of the hardware plays as well. But we heard from AMD, NVIDIA, and from Broadcom, and all 3 of those had very good earnings. So I'm not expecting Oracle to have bad earnings per se, but you know how this market has been, right? If a company's ran too much, even though the numbers could be good, if they just come in line with guidance or don't beat it by a high enough wide margin, well, then you might have a bit of a dip on Oracle, but not only them, on other technology plays as well. And then shout out to Adobe, which also has earnings on Thursday. That could also affect some of your software as a service plays, especially the ones that have a certain point right now where AI is said to be to affect their business currently, right? So just keep that in mind for your software as a service plays. Other than that, guys, the week is appearing not too bad. We also know that we do have seasonality right now, even though the early stages of the month of September have been quite resilient. We had the initial drop on the Tuesday, and then the markets rallied to new all-time highs all throughout the week. But we know that September is very bumpy, right? You can clearly tell from this chart. Early September, bit of a drop. Then we supposedly get a pop, and then it kind of unravels towards the end of the month. So we'll see what happens there. And I will remind you that September is the seasonally weakest month all across the board. You can see that right here. The month of September since 1928 all the way through 2009. I don't have the other data set available. I'll try to bring it up for next video, but you guys know all last week I was bringing up several of these charts. All you have to know is that September is notoriously the worst month of the year, so we still have a bit of seasonality to deal with, which means that it doesn't necessarily have to be red, but it can be very bumpy, as opposed to a month like May, June, and July, where just you were categorically in an uptrend and there was nothing stopping the market. So we still want to be a bit cautious, and we still want to be very methodical and very disciplined with the short puts that we choose to write in this current market. That being said, the bulls right now are still in full control, right? It's still a very nice daily uptrend, and we have a lot of space between us and the most recent lows of Tuesday. This is your most recent support area, very small one, 639 down about 634, and your higher lows are all the way down here. So I do still believe that any short-term dips will be for buying, and there's several companies that we'll take a look at later that are not closer to their all-time highs anymore. They've pulled back. So in the event we get further pullback on the SPY this week and possibly further pullback on the Qs, just remember, guys, who is in control of the highest time frames of them all? It is your bulls, right? So in the event that the month of September ends a little bit in the red, we got very decent support down here on the Qs, 539 to 520, and then on the S&P as well, you got very decent support down here, 614 down to 600. So in the event you get the unraveling of the indexes, phenomenal opportunity to go shopping for some short puts under the market, whether it's on a weekly basis, a bi-weekly basis, a monthly basis. I know some of you guys like selling puts on a longer time frame. That's fine, provided you get the good ROI. So essentially what I'm saying is I am still a big fan of buying the dip on some of our favorite companies, but not on everything. We have to be very calculated with the companies that we choose to do this on. So today's top 5 options plays will all be on companies that have pulled back a lot more than the SPY and the QQQ have so far already. So that being said, that's everything for your early market introduction presentation. Now, in terms of what we have to look for the strategy rules, these are going to be the strategy rules. Take a screenshot of them. I will leave a video down below in the description, guys, a 10-minute segment where I explain these rules one by one. I won't be doing it right now just to save some time on the videos for the YouTube algorithm, but I will leave that video in the link to the bottom of the description. The bull market wheel strategy, I go over it for about 10 minutes. I go through every single one of these rules individually and why they matter a lot. If you're new to the channel, please go watch that video. The last thing you want to do is sell puts without a consistent strategy, guys. It opens up the door for some very bad surprises. But if you are respecting the strategy, and I know many of you have been so far, you get some very good results. So make sure you are respecting every single rule in this list. Take a screenshot for now, save it as a copy so you know what to look for when you're shopping for these things, but also have a look down below at the video in the description. It's about 10 minutes and it'll explain everything right here very clearly. So with that out of the way, guys, let's now jump into our top 5 options plays for the week. All right, so company number 1 is going to be one that you guys know very well. It is going to be AMD. Now, the reason I love AMD is for a couple key reasons. Number 1, we're coming back into the infamous fallback area that I've been talking about now for several weeks, talking about the 150 all the way down to 135. This is a very decent area to be accumulating some shares and or selling some put options for the wheel strategy. Huge weekly area of support, and also just looking for a good old monthly breakout and then back test of a lot of your bigger EMAs here on the monthly time frame. Now, we also have some very good valuation metrics for AMD at 150. It's a bit cheaper than it was all the way up here at 190, talking about a PEG ratio of 1.29. That is extremely attractive, keeping in mind that AMD is growing revenue and EPS at very fast paces. And over the next few years, the thesis for AMD is still well intact. They're going to pretty much double their EPS metrics through 2027, and they will also double their revenue metrics as well. So this is probably one of my favorite semiconductor plays at the moment. So I do still want to be playing these very juicy pullbacks, especially when we might be on the verge of hitting into daily oversold conditions. Now, for the wheel strategy, we know that we also want to be riding below the expected move. The expected move is this yellow line right here, 145.15. Now, good thing for us, it is still very deep into support. And right below it, down here into support, is the 200-day moving average at about 137 as well. So this is what I like to call an area of confluence. The valuation is very manageable right now. It's very large support as well. The bulls control the higher time frames, and you're coming into several very big EMAs and possibly some oversold conditions shortly. So that being said, let's have a look on the options chain and see, can we find any short puts for this Friday below 145, preferably as low as possible into this support range? Let's have a look, shall we? So let's put the options chain here for AMD, and as you'll see right here, well, where are we looking for the 0.5% rule? 0.5% rule is what I look for the ROI as per the strategy rules. If you don't know what that means, essentially, you're looking for 0.5% on the bid in relation to the strike price, yeah? So let's say if you want to do it very quickly in your head, you just divide 142 by 2 in your head, that's 71, and you're looking for about 71% on the bid. That is your take-home pay. That is pretty much the ROI on a weekly basis. If you want to look right here, if you just divide 0.71 by 142, you'll see that you get a very casual 0.5%, which is the strategy minimums. If you go too close to the market, guys, your risk of assignment is too large. I know the premium looks very juicy, but it's juicy for a reason, right? Because you have a very high chance of being assigned. If you go way too low, then you're just not making enough ROI for the capital that you put out there. So the 0.5% rule for me is the sweet spot that I usually run. So that being said, 142 would respect the rules this week. It's below the expected move. It is decently into support. And that, as a matter of fact, is the exact same contract that I have running into this week. However, if AMD drops even more on the Monday session, well, you might get even luckier. Maybe you can find the 140 strike, right? Which would be even better than mine at 142. So I love these strikes, 142 down to 140. And who knows if AMD has an even worse day on Monday than it had on Friday. If it goes down, another 5-6%, let's just say, because anything's possible, then you might even find the 135s. All of those strikes do represent some good areas into our support range, so you want to go as low as humanly possible to pick up some possible AMD and or just farm the premium. Now, stock number 2 as part of the top 5 options list, guys, is going to be NVIDIA. So NVIDIA, another very solid company, and we've been waiting for this one to come down. You might remember me in the past few weeks, I've been saying I'm waiting for the weekly higher lows to be formed, and I'm waiting to get some entry opportunities down here into the low 150s, where you have the larger area of prior monthly resistance, which will be current monthly support. Well, now it's finally happening. So now I'm happy to say I can finally play it. We covered their earnings a few weeks ago on the channel. They had fantastic earnings, and even at 170, the valuation wasn't crazy, guys. And this is the 2025 forward price to earnings. If you take a 2026 forward price to earnings, it's actually in the mid 20s. So NVIDIA here is not a bad buy, but down there in the 150s is actually kind of where I really get interested in this one too. So the expected move for the week this week is 161.74, but we know that the larger support starts at about 150. Now I'm willing to play a bit earlier than support, call it about 155, but what I don't want to do is play it too close up here, right? I want to be in the 150 handles, 155 and lower than that. So with an expected move this week of 161.74, this line right here, let's go shopping to see how far down can we actually get AMD. Is it ready just yet? Or will we have to wait a little bit? So let's have a look here on the options chain for the Friday close and try to find where we can find 0.5%. So 0.5%, half of roughly 155, 160 is going to be what? 75, 80 cents. So we're going to look where we can possibly find that. As you can see right now, the only strike that's there is the 160s for about 90 cents. Now that's still a little bit too high for me, although it is within the confines of being below the expected move, which is a strategy rule. I want to be a bit more picky, and I want to wait for the mid 150s to free up. So you guys know what we're going to be, what's going to have to happen here. You're going to have to wait for NVIDIA stock to dip a little bit more. If I took a look at the 157.5s for the Friday session, here is the Friday session value of this option. You can see on this chart that contract got up to about $1.10, $1.15. So the 157.5 was available early Friday morning, and even the 155 strike was available too at about 75 to 80 cents for a good portion of the morning, around the 10, 11 a.m. Eastern area. So if you're not going to be there, what you can always do is set a limit order to get your 0.5% for the Friday in the event that you cannot watch the markets. As a matter of fact, that's probably what I will be doing since I am traveling right now, setting a limit order for the 155s. If they fill me for 75, 80 cents, perfect. I'm into the trade at the exact location that I want, which kind of saves me from having to watch the markets and snipe it at the absolute market lows in the event that I'm not there. So 155 to 150, very decent area for NVIDIA, and that's going to be options play number 2. Now, options play number 3 is going to be another company that you guys know very well, and that's going to be Amazon. So Amazon coming out with tremendous news in the past week in terms of their updates on Project Kuiper, in terms of their updates as well with AWS, very strong metrics on both those fronts, and Amazon is just one of my favorite companies here moving into the next 1, 2, 3 years. That being said, the technicals are also not looking too bad. The bulls have been really protecting this area, talking about big support of 227 down to about 218. So now that we're above this area again, I want to be playing the fallback into this location if it does happen over the course of this week again. Fantastic fundamentals, fantastic technical aspects on the chart, so I do not mind playing Amazon in the lower area down here. Call it the lower 220s. So that being said, the expected move for the week is 227.19, a little bit high. I want to be lower than that, guys. 222, 220 is where I'm going to be looking for Amazon. So let's go shopping on Amazon stock and see what can we find in the 220 range. Can we find anything at all? So if we want 0.5% and we're looking at the 220 range, you would have to find about $1.10. As you can see right here, it is not there yet. So Amazon does need to come down maybe 1 to 2% more. So if on the Monday or Tuesday morning sessions, you can find Amazon perhaps pulling below 230, right? Starting to maybe come back into the Thursday candle a little bit, start to fill this gap right here, moving towards the expected move, 230, 229. Then you guys know the drill. Exactly what's going to happen is that the 225, 222 premiums are probably going to free up. So this week for me on Amazon, 225 all the way down to 220, as low as I can possibly get, depending on the size of the moves, because we don't know if Amazon's going to drop 1% Monday or Tuesday, 2%, 3%, maybe it doesn't drop at all. But this is front and center on my watch list. If I do find that drop, I will be playing Amazon. And as I said, 225 down to 220 are my preferred strikes. As close as I can get to 220 would obviously be the most favorable. That's it for stock number 3. Stock number 4 is going to be one that we've been covering for several weeks in a row now, and that's going to be SoFi. So SoFi right now, the reason that I like it, a few key reasons. Number one is this pullback into support, 24.5 down to about 22.5. That is the resistance range from the all-time highs. SoFi has very good momentum right now, and also doesn't have that bad of a valuation. At about 25 bucks, it's still relatively cheap, not expensive by any metrics, a 1.61 peg, and also a 9 price to sales, which in the context of other brokerages out there like Robinhood is quite cheap in comparison. Robinhood trades at like a 24 price to sales, SoFi only at a 9, and still well valued here, are very fairly valued, excuse me, at about a 1.61 peg. As a result, I do still want to make the most of any pullbacks into this area, but I will be staggering the trades, as I've been talking to you guys about, right? 1 or 2 contracts down here. Let's say my maximum contracts on SoFi was 5, right? Let's just say that's my maximum size. I want to play this in a staggered way because I also know on the monthlies, we're very extended right now. On the weeklies, although the weekly bulls do control this chart, still, we would be lying to ourselves if we said that we're not extended. We're overbought on the weekly RSIs. You can clearly tell by the price action. We're way extended off the EMAs as well. So I don't want to put all my eggs in the same basket here, but I do want to play it a little bit just to make the most out of this support range on the pullbacks. So $23.50 down to about $23, $22.50. So this whole 23.5 down to 22.5 range, decent area to be selling some puts. But as I said, if I had 5 contracts, maybe I would do, 1 here or 2 here, and then wait for 2 more down here at the lower 20s. And then if the markets really get bad throughout the month of September, maybe we can possibly find some last ones, 1918. I want to be playing them with a staggered fashion. That way, any and all pullbacks, I'm getting into the stock. That way, I'm getting ready as well for the next monthly leg higher, which I do believe will then carry SoFi beyond $30 if they just cannot get the lift from here immediately. So the expected move for the week, guys, is about 24.24 for this week. Let's go shopping on the options chain and see what can we find below 24 bucks. So let's have a look real quick. There was some great premium, by the way, guys, on Friday. I don't know if you found it, but I'm in a couple contracts as well here on my own accounts. If we take a look here for the upcoming week, September 12th, you can see that, matter of fact, at 23.5, there is some very decent premium here. Look, 16 to 17 cents. That's like 0.75% for the week. Very strong. Even at $23, you're currently having 0.5%. The expected move for SoFi this week, guys, is 24.24. All of those strikes are below the expected move and within the confines of support. However, if you are lucky enough to find SoFi on a big decline early on Monday, maybe, just maybe, you can get even better than that. You might be able to find the 22.5, maybe even the 22 strikes. So try and get as low as possible into that support range. As I said, I'm fine with most of all these strikes. Just don't go too heavy, right? Take a staggered approach to it. 23 to 22 is pretty decent for a first entry, in my opinion, for this beautiful company. That's stock number 4. And now stock number 5 is going to be another one that everybody knows. It's going to be Airbnb. So the reason I like Airbnb is, well, there's 2 reasons, as a matter of fact. Number 1 is going to be because we're coming back down into an infamous area of technical support. Yes, once again, under 120. 120 down to about 100 bucks. This 20-point range has been the same area that the bulls have played defense so many times over the course of the last 2.5 years. while the company's been improving its fundamentals as well. Take a look at the fundamentals right here. It's currently trading under a 30 forward price to earnings, a very manageable 1.47 peg, and also a very attractive free cash flow yield of 5.3%. Airbnb is growing revenues, they're becoming more profitable. However, the stock price is still a little bit stuck down here in the low 120 range. So I do want to be playing some pullbacks if I can find them under 120 into our infamous support area. Now, the expected move for the week is about 120.45. So let's go shopping if we can find anything under the 120 range and get our very nice 0.5% profits. So let's take a look at Airbnb real quick. So Airbnb, if we take a look at 120, you'll want to find 60 cents, right? Half of 120 is 60. There you're looking for 60 cents on the bid. As a result, at 120, you can find it right now. However, if Airbnb starts off the week with a red Monday or Tuesday, well, who knows? Maybe you can find even better than that. 119, 118, 117. You guys always know me, right? I always try to be the most dynamic that I can with all of these strike prices. I might give you one price or one strike range on the Sunday videos. However, if it drops 2-3% and I can find like a 117, 116, of course I'm gonna do those, right? I'm not just gonna stay here at 120 because that was the one that was available on Sunday evening. So you have to be a bit dynamic and be logical with your strike price selection. However, I do enjoy anything below 120, right? 120 all the way down to 115, not a bad opportunity to be shopping for some Airbnb down there. So I'll be looking very closely at this one, and you wouldn't be surprised to see this one in my portfolio if we do get a little bit of a further decline throughout the early portions of the week. And that is it for your top 5 options plays, guys. So hopefully you guys enjoyed those. Now I'll be presenting you guys 10 bonus plays. The 10 bonus plays, it's not because they're not as good as the top 5. It's just because either number 1, they're more volatile, or number 2, they're just not quite ready yet, right? They're just slightly off areas to be ready, but still some that I pay close attention to on my watch list. So these 10 plays will be divided into 4 different sections. Number 1, I'll give you guys 4 growth plays. Number 2, I'll give you guys 2 value plays. Number 3, I'll give you guys 2 plays for small accounts in the event that you don't have that much money to work with, but you still want to run the wheel strategy. And then number 4, I'll be giving you guys 2 plays for very big accounts. So you guys that are able to write short puts on stocks, you know, that have a share price of $200, $300, $400, $500 type of thing. I'll be bringing you those plays at the end. So let's jump into the bonus plays right now. The only thing is that I won't be giving you guys the expected moves. By now, you guys are all professionals. You're able to find that on your own. I didn't say it this video, surprisingly, but if you guys want to know where the expected moves are, very simple. It's this website right here, barchart.com. Just type it into Google, bar chart, expected move, then whatever stock you're looking for, it'll give it to you on the chart, but it'll also give you down below here in the table, the upper and the lower price. You're just looking for the lower price, and you want to be below that. So for these bonus plays, I won't be giving you guys the expected moves, but I will be giving you guys the areas that I'm interested and why I'm interested as well. So here we go, part of the growth section, yeah, for the bonus plays. Play number 1 is going to be new holdings. Now, new holdings, we talked about it a few weeks ago during their earnings. Phenomenal earnings, beautiful revenue and EPS growth, and a very low valuation right now. At least it was when it was trading around $13. Around $14.50, it's pretty much the same thing. Just add 10% to these valuations, still very cheap. And the company's doing a wonderful job of breaking out of this infamous area that was resistance, it was support in the past. You can clearly see it's a very large area. So as a result, this is now a weekly uptrend with a breakout, possibly looking for a retest. I want to play this retest location, $14 down to 13. If I can find some short put opportunities, 14 down into 13, I definitely will be playing this one. Stock number 2 as part of the growth list is going to be Toast. So Toast is a very strong company. We don't talk about it that much, but their growth is substantial right now. If you take a look here, they're becoming more and more profitable despite not being net margin positive right now. They're working their ways towards that. And look at the EPS growth. Very nice EPS growth from negative and very attractive revenue growth as well. Their valuation right now at about $24 billion is very manageable. You could put them in the fintech space. You could also put them at a point of sale terminal space, which is something like Square does and other merchants do as well. The valuation on price to sales and even on a forward peg ratio is quite manageable right now, and probably one of my favorite companies that nobody really talks about. That being said, I'm looking for the deeper retest on Toast right now. It has a very beautiful monthly uptrend, as we can clearly see. If we come down a bit lower, guys, I'll be targeting this lower area here. 36 down to about 33. If I can find some short puts down there, I will be playing them. Toast is a company that we used to play a lot back here, playing under this range, and it was always good to us. Now that we're kind of breaking down below a little bit, well, we got to target the lower end of the range down here, which is like 37, 36 and under that. If you do fall a little bit more into the 200-day EMA, you possibly will also be a little bit daily oversold. So you want to line up those confluence factors, and if you can get some good distance, I think we can end up with a very nice position. Now, stock number 3 is going to be BITX. This is the Bitcoin 2x leverage ETF. You guys are free to play IBIT if you really want to, but the whole thesis here is we're looking to play the Bitcoin pullback into prior all-time highs. It's a very clear area, right? 107 down to about 100,000. Very clear area, which the Bulls have been playing good defense in or around over the past 2 weeks. And also, we're just looking for some monthly higher lows in this beautiful monthly uptrend. Very clean chart for Bitcoin right now. So any further consolidation into prior all-time highs, I definitely will be a big fan of playing. If you guys want to play this with IBIT, be my guest, but that would be like the high to mid 50s on IBIT. On BITX, that same area, I'm playing the lower 40s. Call it 45 down to about 40 bucks. I've been playing this location several times over the past few weeks, and we've been doing it very successfully. I right now still have an open contract for next week as well in that same location. I'm down here at 45 for next week. So if you guys also wanted to participate, that is roughly around Bitcoin 105, 104,000 if you're looking for the proxy. And then growth stock number 4 is going to be SOXL. In the event that you wanted to play the semiconductor ETF, of course, this one is based off the SOXX. The reason that I like this one is if we use the SOXX's chart to get inspiration from, right? On the SOXX, you can clearly see huge area, guys. Prior resistance, it's going to be current support for the markets. You can tell that on the weekly charts, but even more clearly, you could tell that on the monthly charts. Any pullbacks in our semiconductor index right now is going to be looking for a monthly higher low for further trend continuation, maybe end of Q3 into Q4. So keep that in mind. So if I'm looking to play a pullback on the SOXX, where does that translate to a pullback on the SOXL? Well, area number 1 is going to be this lower 23.22. I've been playing the heck out of these 23.22 contracts, I would say, for the last 5-6 weeks in a row. However, I'm using a staggered approach. If my maximum contract size on SOXL is, let's say, 10 or something like that, right? Well, I'm going to be doing 5 here and then saving some buying power. If ever we really get the bigger decline that people might be anticipating here, well, I'll be doing 5 more contracts down here at 18, which will give myself a cost basis somewhere down here in the low 20s, which consequently is a cost basis on the SOXX deep into the support range. Okay, so keep that in mind. That's how I'm playing SOXL. Do not play it too close, guys. Don't get too greedy on that one. Those are your 4 bonus plays for the growth segment. Hopefully you guys enjoyed that. Now, 2 value plays. Number 1, it's going to be Nike. I mean, Nike has been presenting some good opportunities a lot over the past, let's say, month and a half, right? I like Nike down here. The valuation is not too commanding, and also it's a very decent area of support. This whole lower 70s location, I mean, other than the massive tariff sell-off, of course, right? This whole lower 70s location is pretty good, and we heard from their earnings a little while ago, right? Back in June, and the company is kind of well into their turnaround story right now. They're rekindling the relationships with the wholesalers such as Foot Locker and other brands like that. And also number 2, the brand is getting back to what once made it great. A lot of very big profile sponsorship deals with professional athletes, really getting back to the basics of doing sportwear and not so much only fashion wear like it kind of got caught up in doing for the last few years. So the turnaround story is here. As a result, I'm still a big fan of giving Nike a chance down here, lower 70. So pay attention to it if it's something that you like. Moving on to PayPal. It's going to be value stock number 2. The reason that PayPal is a value stock is, well, quite simply, it just does not have the revenue growth to be a growth company anymore. But what it is doing well is delivering on the value metrics. Price to sales is very low right now at about a 2, and the free cash flow yield right now is about a 9.35. This company is buying back a ton of shares. It is still decently profitable, although it's not growing total payment volume and its customer base as fast as it once was. I think they will largely be able to defend this very cheap cheap valuation. Couple that with the fact that you're at 2-year lows, 3-year lows almost, of a support area. And if we zoom into it again, this area down here is like 67 down about $60. So whenever PayPal has these big red days like we saw on Friday, it can be a very decent opportunity to play some short puts into the mid 60s, 66, 65, things of that nature. And I would not mind being assigned PayPal down here because it's very cheap and the support level is clearly defined, right? So that's everything for your 2 value plays. Now for 2 small account plays, play number 1 is going to be Sentinel 1. We've been playing this one quite frequently, I would say, over the course of the past month and a half. Friday, it had a very big push, 3.2% to the upside. The best area on Sentinel 1, in my opinion, is down here like 17.5 and under, 17.5, 17. You want to be targeting the lower bound of this support range. You can clearly see for the past 2 years almost, it's been very large support for the stock. We also covered their earnings quite recently as in terms of about a week and a half ago at this point in time. And we did see that their valuation was on the cheaper end for a cybersecurity company, 1.67 peg at $19 and 5.86 in terms of a price to sales. That's very cheap, especially when you compare it to bigger names such as CrowdStrike or Palo Alto Networks, or even other companies like Zscaler or Cloudflare, or things of that nature, right? So I do like this company because it has a relatively cheap valuation compared to its peers, but also because it has a very, attractive support level that we could be making some plays off of. So Sentinel 1 down there, 17.5, 17, 16.5. Pay attention to it. Keep it on your watch list if that's something that you might be interested in. And play number 2 for the small accounts is going to be APLD. Very hot retail stock right now, of course, directly exposed to the data center and AI narratives. APLD, very easy trade in my humble opinion, would be a back test down here, talking about the roughly, let's call it, I'll be a bit generous with this one, call it 11 down to about $9. This whole support region, which we kind of just broke out of recently with their fantastic earnings. They had really good earnings. If we come into a pullback, this one has such good volatility. You don't need to be into support to be able to write at support. No, one little more candle like this, another 4 or 5% red day, you'd be surprised. You might be able to get some premium down here around the $11, $10 range, which is close to support. And I know some of you guys really like this stock. And if it does come down there, you might see me playing this one as well. Those are your 2 plays for the small accounts. Obviously, shout out to New Holdings in our growth segment. That was also a very small stock in terms of share price. And now lastly, 2 stocks for big accounts. Number 1 is going to be CrowdStrike. So this one, you're going to need a big account to do this one, guys. But CrowdStrike is finally coming into a very nice area for us. This is a beautiful monthly uptrend, looking for a monthly higher low. 3 months of consolidation at this point, coming into prior monthly levels. The monthly levels on CrowdStrike I would be interested to sell puts on would be roughly down here, 390 down about 365. Try to get as close as possible to the lower bound of this, but I would be a very big fan of playing this CrowdStrike monthly consolidation. They had really good earnings, right? Very good earnings. It doesn't mean that just because the market didn't respond to it that well that they weren't good. Their earnings were very attractive. We covered them on the channel as well. The valuation, although still slightly elevated, it kind of deserves that just because of the growth rates of the company and because it has a dominant position in the cybersecurity landscape. So as a result, I will be looking for some CrowdStrike short puts down here. Let's call it, best, 375, 365 on any further declines. Matter of fact, on Friday, there was a fantastic, or on Thursday rather, there was some fantastic opportunities this week to write those contracts. Several of my Discord members actually found those as well. And now the last stock, CRM. I know, surprisingly, even after their earnings that were not well received by the market. CRM is coming to a position right now where the valuation might just be a little bit too cheap to not play. Some people love this stock, some people hate this stock. However, I'm just here to say the valuation right now, 21 forward price to earnings, 1.57 peg, and a 5% free cash flow yield. Those are very good, guys. I mean, we can say what we want about CRM. Those are very good numbers. Additionally, we were at a lower bound of the support range right here. Call it about 235, 230 is the lower bound of support. So this week, if once again, we start off the week with a bit of red, similar to what they had after earnings, I will probably be looking to play this one as low as possible. I would love to be able to get a 230 to 220 strike. We will see what happens, but As I said, Salesforce is becoming a bit too cheap to ignore. Preference for like 220, which is the lower bound of the lower area of support, something that we have not tested since last year, but I also would not mind even a 230, right? So 230 down to 220, this little pocket, either targeting the bottom end of the current support range or the top end of the next support range. Up to you. If you want to be more patient and see if you can find 220, I would not blame you at all, but I just figured it should be something that you might want to keep on your radar if this is the type of company that you enjoy playing. So that being said, guys, that's everything for today's video. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every single Sunday, even when I'm traveling. And last but not least, if you have any questions on the strategy, please feel free to leave them down below in the comment section, and I'll do my best to help you out before the week gets started. So I'm wishing you guys a very good week in the markets, and in the event that you wanted to join a trading and investing community and trade with us every single day in the markets and have a lot of fun in the process, you can consider joining our community. The link to our community is down below in the video description. What you get access to is you get access to all my trades in real time. So we trade a lot of the wheel strategy in the Discord, right? You get access to all of my wheel trades. You get exposure also to all my other options trades, whether they're credit spreads or debit spreads or leap call contracts or swing trades with shares, because I don't only run the wheel strategy with options. I run many different option strategies as part of the whole account trading strategy, right? Now you can take a look at some of our trades here recently, the past like 2-3 months. The green little check marks are wins, the red little circles are losses. So those are all the trades that we've done. And you also get access to our private morning live streams Monday through Friday, where I trade the markets at the open, and I'm with you guys for about 2-3 hours. So I will trade live, and then I'll take all your questions on your stocks, your options, your long-term portfolios. It's a great place to interact with me and ask me direct questions. That way I can answer you in a very detailed fashion while showing you charts, while showing you the options chain. It's a very nice learning experience for everybody who's there. If you can't be there, they're always recorded. And of course, you can ask me all your questions in our chat rooms throughout the day, and I'm very fast to answer even when I'm traveling. And last but not least, you get access to our private video educational section, where I go over many different trading strategies. Not only the wheel, there's a couple types of wheel strategies in there. Not only this one, also one for large accounts, longer dated contracts, stuff of that nature, but full videos explaining how I do my call options, debit spreads, credit spreads, technical analysis, fundamental analysis, so many different educational topics in that section. And lastly, you get access to all my charts. If ever you guys just wanted to copy all my charts, all my watch lists, the support, the resistance levels, and everything that I ever write down for fundamentals on like 200 plus stocks at this point in time, you can just copy paste all my watch lists, all my charts, and it's very easy. 2 clicks, 10-15 seconds. That's all it takes. So if any of that interests you, as always, the link to the Discord is down below in the video description. Hopefully I get to see a few more of you in there with us in this upcoming week. And if not, I guess I'll see you guys right back on the channel. That's it for me. Take care. Have a great start to the market. Have a great start to the week, and hope you guys, wishing you guys the best of luck in the markets. Sorry, I can't talk. It's like 3 in the morning. I'm going to bed. Peace.